What's up, everybody? Welcome to the May 4th, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. Today, we're going to get right into those hot button market issues. So let's get started. Let's start with one, big tech. I think the kids are growing. They're growing and they're spending. I think generally the numbers of the big five companies that reported last week, Apple, Meta, Microsoft, Amazon, Google, I thought from a revenue and earnings perspective were phenomenal. From a CapEx perspective, they are still spending aggressively. I did not hear a lot of conversation with regard to pulling back spending at all, or efficiency over deployment or anything like that. Most of the conversation was it's still a land grab and we still want to be the biggest one on the block. And so we're going to spend to do so. So they're spending for market share at this point right now, which continually just brings those numbers up, 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 and up. So if you look at their earnings reports, I thought it was really interesting. So revenue, the worst performing revenue side was 16%. So everybody did at least 16% or higher on a year over year basis from a revenue perspective. And these are massive companies. These are trillion-dollar companies. So these are not small companies that are growing at a double-digit rate. From the earnings side, Meta was the lowest at like 14%, but I mean, then there were 20s and then there were 50s and 70s and 80s. So really strong revenue growth, really strong earnings growth compared to where they were a year ago. So from that perspective, everything seems to be humming along. If you look at their stock performance, not quite as good. So the standouts were probably on the positive side, Google, which continues to rally aggressively. If you remember at this point last year, probably 12, 18 months ago, people were really concerned that Alphabet, Google, was going to have real problems with regard to artificial intelligence and the replacement of search by AI. And so the stock really kind of languished while everything else in that landscape was working relatively well. Google was kind of sitting there. Our stance at that point was that was crazy, is that one, none of this is set in stone yet. And we would still say none of this is set in stone yet. But that Google was in a really good spot to benefit from the deployment of artificial intelligence if they got it right. And we were so early that everybody considered Gemini a flop and a failure when it first came out. And, our stance here was much more, let's give it some time and let's figure it out. Again, we're still at that. Let's give it some time because these things change, right? Is that everybody was so ChatGPT friendly about a year and a half ago, and Gemini was terrible. Then that flipped. Now Claude is getting the entrance. So it is still really up for grabs about where people are deploying their assets and resources. I think it's still, because it's such an open area, that people are still saying, okay, who does what well? And I still think we haven't fully figured that out yet. But from Google's side, I mean, the performance has been phenomenal, and it was up another 12% last week. Meta, on the other side, was down 10%. So they struggled. Again, what's different about Meta is that they don't have a specific valuation case around the deployment of artificial intelligence like the others do, right? Is that Meta is primarily an advertising company, right? They do social media networks, and they build advertising around that. Well, artificial intelligence will help them, no question. But all the other ones have real revenue cases around the deployment of it, whether that's corporate deployment of more tools and resources, whether that's more computing need, or whether that's, in Apple's case, like a consumer-facing usage perspective that really brings this thing to the forefront. So from all perspectives, they're kind of benefiting from that. And Meta has a little bit less of an argument there. I do think the minus 10% on elevated CapEx numbers that weren't quite as good as people had anticipated. I think that was maybe a bit of an overreaction, but I can see the case why Metas would be a little bit weaker than the rest of the group. But taking a step back, I think if you're looking at it overall, I think big tech is continuing to grow really fast, which is allowing them the capability to use those resources from their growth and their revenue growth and their earnings growth to continue to try to gain market share in the artificial intelligence deployment. So it's kind of a self-fulfilling prophecy to a certain extent, in the effect of they're using their growth profiles and the revenue they're generating to spend more and more and more and more so that they can sustain and so they don't get replaced down the road. Turning to number two, we have Chair Powell, probably had his last meeting as Fed chair. They didn't do anything on rates. Again, that was widely anticipated and, wasn't really honestly worth talking about. There wasn't a ton of commentary that suggested that there was an imminent path. There was a significant amount of dissension among the Federal Reserve, the most since 1992, I believe. So you got a little bit of a crossroads here as Chair Powell starts leaving. But what I put here is, but not really, is he is actually staying on as a governor for an undetermined period of time. I think he can go until 2028. We'll see if he ends up staying that long. But there will be a new chair soon here. Kevin Warsh will be coming in as Fed chair. And it'll be interesting to see, when I talked about at the beginning of the year, I said the first half of the year was probably going to be largely stagnant unless we saw something pull them out, whether it was reaccelerating inflation, whether it was economic deterioration. Something would have to pull them out of stasis. And there wasn't enough to pull them out of stasis during this period, certainly. As a new Fed chair comes in May and June and July, I think there is going to be pressure to do something. President Trump has long been a proponent of reducing interest rates, and the Federal Reserve supposed to operate as an independent body. We're going to test that theory here a little bit over the next 6 to 8 months. I think there will be substantial pressure that as you change up about doing something with regard to rates. But the question is will the economic data back what the pressure is? And so with Chairman Powell now going to a Fed governor seat and a new chairman coming in, it will be an interesting time. I don't think anything in the early outset. I think 0 is still the highest probability that no change to the end of the year. Still the highest probability in the market right now. But I've talked about this before, is that March and April, that completely shifted. And so sentiment change can shift very quickly from 0 to 2 cuts, from 0 to 2 raises. Now that would be weird, but it's possible. We'll see where it goes next. I still think in the next couple of months, though, there's probably not enough data or enough dissension. There is quite a bit of dissension, but I don't think there's enough to really make a dramatic movement at this point right now. But the commentary and what comes out post the new chair coming on board will be interesting and worth paying attention to. Turning to number 3, I'll go quickly on this one. We have a jobs report coming this Friday. Obviously going to be highly watched. We're in this malaise of low hire, low fire. I want to see what changes. I want to see if anything changes. Are we seeing wages stagnating further? Are we seeing deceleration in things outside? Are we seeing artificial intelligence deployments really having an impact on what we're doing from a jobs perspective? I'd say from an earnings perspective right now, when we talk about, when we hear from commentary, we had some higher profile layoffs, but I haven't heard it very aggressively across the board yet. So I don't see this as going from low hire, low fire to more fire, no hire. I haven't seen that yet. I haven't seen evidence of it yet. Economic data would suggest that we're not there yet. The near term, the real-time data type of stuff doesn't suggest that we're cresting downward. In fact, it seems like we're kind of bouncing the other way. So we'll see. But it will be a well-watched report as always. And from my side, I just want to see if there's any change in trend from this low growth kind of malaise job growth that we've seen thus far. Turning to number 4 on the personal side, I was a happy camper last week from Minnesota sports side. I'm not a hockey person, so I'll talk about hockey quickly. But the Wild did win their first series in, I think, 11 years. Well, we'll see where that goes. They lost their first game last night. And the Timberwolves start tonight after surprising most people and beating the Denver Nuggets, especially with two of their starters hurt. They were able to scrap together a Game 6 win, which was phenomenal. It was one of my favorite Timberwolves games I've ever seen. So that was fun to watch. I always put a little sunshine before the rain, though. That was definitely sunshine. As Minnesota sports people, we have one of, the Vikings probably being the predominant one. We have a very long history of getting our hopes up and then getting dashed. So we'll see what sunshine before rain. As I said before, the Wild kind of came and now they're playing the Stanley Cup favorites. It sounds like, again, I don't know hockey very well, but I know it enough to know that team it looked good and they won 9-5. And we'll see what happens tonight with the Spurs versus the Timberwolves. Good news, sounds like Anthony Edwards may be back soon. So Minnesota sports right now, except for the Twins, who don't spend any money and are back to basically being where we thought they were, which is on the losing end of pretty much everything. Minnesota sports is kind of fun right now. But we have trained ourselves to believe, and then get our hopes dashed. So we'll see if that happens again. That's it for me for this week. Tune in next week where we'll have our next hot button topics. But until then, thank you very much. Take care.